everyone. We're going to get started. Welcome to this panel on the role of OTC desks in the crypto market, in which we're going to discuss liquidity, we're going to discuss market structure, and the evolution of the crypto ecosystem more broadly. And I can assure you it's going to be a pretty high-octane discussion, as you can probably tell, judging from the caliber of the panelists that we have. I imagine there's probably going to be some controversy and debate as well. So I'd like to start off with each of them introducing themselves briefly and explaining what their firms do. I know you probably already know David Mercer if you saw his fireside chat earlier, but in case any of you were out getting coffee or you missed it for some reason, David, a brief summary.
Hi, I won't bore you with a full intro again. I'm David Mercer, Chief Executive of the Max Exchange Group. We operate primarily fiat exchanges. We trade around 20 billion a day. A year ago, we launched Max Digital. I'm pleased to say Saturday was our best day, and we traded 640 million of spot cryptocurrencies. So
why Saturday, if I can jump in?
Saturday, the market roofed us, Max. Right?
It was just the price movement, right? People waking up.
The market roofed, but we traded $1 billion worth of spot crypto over the weekend. So it'll be our record month.
And this is on the weekend when most exchanges are closed.
No, exchanges and crypto are open 24/7. That's why we all have grey hair. So,
but again, something peculiar to the crypto market.
There's a very simple theory, which is Asia wakes up, reads the social media, and says, "Let's buy Bitcoin." So generally, weekends are busy for us.
Interesting.
So that's me.
Okay, thanks, Gabriel.
Yeah, sure, thanks. My name is Gabriel Wang. So I'm an analyst at Boston-based IT Group. So IT Group is an independent research and advisory firm focused exclusively on the financial services industry. So I sit on the capital markets team, otherwise known as the institutional securities and investments team. I've been doing research and consulting work on blockchain and cryptocurrencies for the past 3 or 4 years.
Thanks, Alex.
Hi, my name is Alex Gordon-Brander. I'm the founder and CEO of Omega One, the first regulated dark pool in crypto. And we're going to start trading next month. So sitting on the other side of that line from David and others here.
Yes, thank you. Max Boonen, I run B2C2, one of the main market makers in the crypto space. I've been operating since 2015, and we also launched the first single dealer platform in the space. Also had our biggest month this month, I think, and also over the weekend, a record day.
And other than that, on the weekend, again, this is something that markets
yes, but the weekends are usually very active. In fact, I think people read social media and they just do that on the weekend. We also got the first regulatory license, the first MiFID, the big license in Europe as a market-making firm.
Interesting. Thank you very much. I'm Noelle Atchison. I run the institutional investor crypto product at CoinDesk, which is one of the leading media organizations in the sector, if you don't already know us. Now, to jump right in, I think we need to put the OTC sector of crypto markets in context. And I think the easiest way to do that is to compare it to markets that we probably already know and love. And David, I know that we've spoken before, you spoke earlier about the relationship between, or the parallels between the OTC market and the FX market. But let's talk about the differences. How is the OTC crypto market different from the OTC FX market? Apart from the weekends that you now have to work.
Well, A, it doesn't really exist in crypto. Sorry, Alex. B, it does exist in foreign exchange. Look, it's a very antiquated method of trading what is the most modern of products. OTC and FX, spot foreign exchange, certainly is an OTC product. So the tails of it end up on centralized exchanges. But what you have is major players in foreign exchange who have inventory. So they can afford to trade from their inventory. And if you like, lessen the market impact by leaking those trades and that flow into the market at a time of their choosing. The crypto market, OTC, there's not many people who have the inventory to trade out of their own book. I think it's a bit of a myth that these $100 million trades flying around the place. If they do happen, they end up being externalized on exchanges like Max Digital. So in fact, Max would be the benefactor of some OTC deal that's happened. And traditionally, people have tried to treat it as an RFQ or RFS, and they provide a quote for a certain period of time in larger size. I happen to believe that algo execution and access to central limit order books, you will always end up with a lower cost of trading. But I'm an exchange evangelist, so I guess I have to believe that.
Max, do you agree?
I do to a great extent. What people say, oh, OTC, hundreds of millions of dollars of big block trades. It's not very interesting because if you do those trades with a complete lack of market infrastructure right now, you're taking immense amounts of credit risk and you don't know what you're doing. But in reality, I always look back to the foreign exchange market where, as you said, there's a big OTC portion to the market and then the tails touching the exchange and things like that. I think we're going to see the same thing in crypto. It's just that at the moment people equate OTC with block trades, but that's not what it is. So the thing is that there's only 2 firms right now, including B2C2, that can actually stream OTC prices in crypto. And so, you don't have a big market for that, but on the exchanges, you've got LMAX, you've got Coinbase, it's been more developed in that direction, but the natural economic forces are pushing us towards more OTC, right? So I think that's what's playing out, but OTC is going to be just like the foreign exchange market. The trade sizes are not going to be big, they're going to be just like the exchanges, except you're going to have a self-selection of market participants that go primarily to the exchanges and others that go primarily to OTC market makers.
You've been trading OTC, running an OTC desk since 2016, no? And so what's the evolution been like? Has there been a growth in acceptance as the need for it becomes more apparent? Or do you see, as David suggests, that more and more people are going to be using it as a
what you find is that exchanges, the flow that is hitting the exchanges is over time going to get more aggressive and more quote-unquote toxic because more sophisticated people with better algos are just going to go to the exchanges. And at the same time, the people that have a more benign user base, like a retail user base, just small investors that don't move the market, they're going to find that the pricing that they get on the exchanges is not as good as what they can get OTC. That's exactly what has played out in FX and other markets.
I disagree. Most of the flow you see today comes from exactly there, right? And you can't quote what they see retail OTC. I mean, you're hitting us in a coin top of the book at $3 wide.
Yeah.
No one's quoting that OTC.
But the thing that David doesn't see is that David sees his own flow, and being one of the main market makers on LMAX, I see David's flow as well, but I also see my flow. And I know that my flow overall is more geared towards OTC, more benign, more less aggressive than what you see on LMAX. And it makes perfect sense because an aggressive client, very smart, perfect algos, knows where the market is going. If he trades with me, I'm going to lose money. And so I'm going to widen the spreads, and if the spreads are too wide, they're going to go to LMAX. And vice versa. Someone's trading on LMAX, if they never move the market, they better come to me because they're going to see tighter pricing overall. And so there's that sort of back and forth of clients that have better reasons to go and exchange or better reasons to trade OTC.
And we're going to look into the role of data. As you say, you don't see the other side a bit further along. Gabriel, you were nodding enthusiastically there. Where would you put the OTC markets in context? With the FX markets or is there some other market that has a longer history that is more representative?
Yeah, sure. I think so. The way we look at this is probably a little bit different. I mean, having been sitting on, I guess, from more a third-party independent side of things, and I mean, obviously at IT Group, we have other teammates been doing research for the long history of the global FX market, right? So from a comparison perspective between the global FX market and the crypto market, I mean, in terms of OTC trading, I mean, one thing we could definitely say is this. There's, from a similarity perspective, why do people even want to trade in the OTC market to begin with? Now, if we look at the FX market, I mean, obviously, most of the trading volume now happen from the institutional space compared to the retail space in terms of for global FX volume. However, I would say, I think everybody in this room is aware that most of the volume are actually in the FX market are actually happening in OTC trading venues or trading desks, whatever that might be, mostly interbank venues, right? And then now, we take a look at the cryptocurrencies market, and what we see here is a few interesting things. So first of all, liquidity on the exchanges are, there are probably hundreds, if not, more than hundreds of different cryptocurrency exchanges trading different kinds of tokens in cryptocurrencies. And liquidity is quite fragmented in that aspect across different exchanges. And people could argue when they trade on cryptocurrency exchanges, there could be potential risks or concerns of price slippage, and and they could also have concerns about the securities feature or just the general technology interface on exchanges when it has to do with digital asset custody and just overall security of holding their tokens. And so, I mean, and there's other reasons to trade in OTC desks today for the cryptocurrencies market. But I think overall, there's other aspects too, right? So just by looking at some of the data that we gathered, I mean, obviously average bid and ask spread have narrowed over the past few years for exchange market and OTC as well. So that is another interesting aspect where a lot of these OTC desks are making money out of the wide spread. But if the spread are compressing, there's going to be, I personally think there's going to be a very interesting dynamic going forward, because on the one hand, there are certain type of market participants that want to trade in the OTC market. On the other hand, the spreads are narrowing, so squeezing the profit of the OTC desk. So I think there's going to be a very interesting dynamic between the trading volume between the OTC desk and the exchange desk. Exchange trading values going forward.
Yeah, a lot to unpack there, and some of those points I want to come back to later. Alex, you're setting up a dark pool in the crypto markets. Why would people prefer dark pool versus the OTC option, for example, if what they want is a fairly anonymous trade?
Well, taking a step back, I agree with David that the big difference between the FX marketplace and crypto is the existence of the big dealers in FX who have large books, large inventories. In crypto, sort of building up more from retail, we don't have that, but we still have this kind of extreme level of fragmentation across exchanges. I think where we're going to land is things that call themselves OTC are either going to be providing agency services, and it's more about client service and sort of providing professional market access, or going to be doing more traditional market making. And then there's going to be core liquidity that's going to boil down to a few exchanges that make the cut. Within those exchanges, I think there's room for a couple of different microstructures, certainly for high performance lit central order books have a place, and dark pools have a place in that as well. So the specific use case of a dark pool in crypto is that these are pretty flighty markets. If you put much information out on the marketplace on a trade of any size, the market's skittish and moves away. And so the opportunity to trade in large size, non-disclosed at a fair mid-market price is something that I see essentially players whose use case is, I just want to trade easily, quickly, at a fair price and not get hurt, will come to a dark pool. Players who are sort of more sophisticated, I don't use the word toxic, but who are looking to actually extract alpha from market microstructure are going to go and play on the exchanges where they can sort of play around with the prices. But I think there's a lot of room for just the use case of being able to move large sizes at a fair mid-market price without hassle and complication.
Do you see dark pools as competing with OTC desks?
Maybe.
I mean, it depends what we mean by OTC desks. If we're talking about, voice brokers and people who are trying to put together deals on Telegram, I mean, I think just sort of life and the evolution of markets is competing with them. I don't know how much that has ever been a thing compared to the noise around it, but certainly the more the larger volume OTC desks, as spreads are compressing, just don't have the economics to be able to compete with exchanges. And we're going to see significant spread compression in this market over the next 2-3 years, and exchanges that require 20 basis points, 30, 40, whatever, and OTC desks that have required higher spreads to succeed just are going to be out-competed.
Let's talk about spread compression. Max, how do you see the OTC sector evolving in response?
So Alex is exactly right in terms of the evolution. So just like in FX, you're going to have a few primary venues, of which I think LMAX is becoming one, potentially also the CME, because in FX, you trade OTC, but you look at EBS, you look at LMAX, that's important, right? So you're going to have those primary venues, and the Bitstamps of the world are not going to be primary venues. They're going to turn more into becoming, brokers, retail brokers for their large user base. That's a different business model. You can have like 1 million users, or you can be a very good exchange.
So more to distribution rather than liquidity
distribution versus on LMAX, it's very institutional. The technology is the best in the space. Together with the CME, they're just the top exchanges, right? From that perspective. In terms of OTC desks, that's exactly right. So the incumbents were voice desks, right? And those guys, the only thing they can do is turn towards an agency model, because if you're not electronic, there is no way that you can compete. Let's just take an example. You do a $1 million trade. Right now, the spread in the market is like 10 basis points. So you do a $1 million trade, you make $1,000, okay? Now, to keep the lights on a big trading operation with maybe 30 people, right, as an OTC desk, you need to make at least 30 grand a day. So you need to make 30 $1 million trades every day and capture that spread, and the market doesn't move against you. Now, the thing is that maybe you can do 100 trades of 100 of the size, but then maybe you make a slightly lower spread. The problem is there's only so many trades that a human trader can do. You can pick up the phone. You're not going to do 2,000 trades a day, right? It's just impossible. So those guys find it impossible to compete at those spreads just because their business doesn't scale. Now, what they can do, they can offer, a wide glove service, but that's more about having like a captive network of users that you can monetize. But it's impossible that the incumbents can compete at the level of spread towards which we're heading.
David, what are you seeing in terms of spread compression?
I think everyone knows the guys have spoken well to it. Look, it's just a fact, when it was only a retail business, spreads were 1%, which cannot be an efficient capital market. It cannot be that way, right? So most LPs now are sort of making spreads of, call it 10 to 20 bips when things are moving north. I think if liquidity pool like ours, you're looking at, you can get as low as 1 basis point, which is still, in foreign exchange terms, is still huge, right? I mean, huge. So it's going to only come down to tenths of basis points as time moves on. The reality is, look, there's lots of reasons for spreads staying wide. It's an expensive product to trade, right? There's a real credit risk that you don't have in other asset classes. So everything has to be priced in to that. So it's going to be wider than FX for a while. It's okay, Max. It's okay, Alex. You can still make some money for another year or two. But look, we're heading south. I mean, think about the pure oil institutional exchange. I mean, like designated market makers, they make for zero. Thanks, Max, you can pay me later. And they aggress for 3 basis points. 3 basis points. If I run a retail exchange out there, I'm still charging 100. So, yeah, I guess I'm leading the path downwards. So
race to the bottom.
I just need to print more often, I guess.
Why is this a more expensive product to trade?
Funding,
credit all
exposures.
Of it. Try borrowing it overnight, right? You've tried to borrow at the weekend, it was 20%, so be careful what you short.
Gabriel, you've mentioned, we've talked about the spread compression before. How do you see it affecting the sector structure? Do you think we'll get consolidation, OTC, and even in the exchange markets? Is there enough demand to support the number of players that we currently have?
Sorry, good.
You're asking me, right?
Mm.
Okay, I'll take a shot at it first. Yeah, sure. I mean, first, like I said, obviously, just by rough estimation, I lost count, but there's definitely more than 100, crypto exchanges, right? I mean, not incumbent exchanges that are, pivoting and adding to crypto assets as a, instrument, but just crypto exchanges. There are more than hundreds, and there's definitely gonna have to be consolidation happening because, I mean, obviously some exchanges are doing better in terms of just profitability and the ability to track volume, track market makers to trade on exchanges. And when the smaller and later comers to the market that are not being able to maintain the P&L and they have to be somewhat, there has to be consolidation. That's for on the exchange marketplace, right? Now, in terms of the OTC side, I mean, we just talked about the spread compression, and there's a lot of other considerations to take into consideration as well. For example, on the technology side, one thing that I spoke with, I constantly speak with the OTC trading desks, on a regular basis. But one thing I do remember back in, I think, early 2016 when I was speaking with them, everybody was kind of trading on, phone, voice, Skype chat groups, right? And you know what? In 2017, I chatted with them again. So how are things changing in terms of how people are executing their trades on the OTC desk? Is it becoming more electronic? I mean, the feedback was kind of mixed, right? Some firms are moving toward that direction, but I would say it's actually the speed or the adoption of electronic trading and moving towards a more, I guess, automated execution method rather than, having to call people up. I mean, obviously, I know that people rely on relationships on this type of trades, but that's just not, to Max's points, some of the operations now today at the OTC desk is just not very scalable. So you definitely need to have some elements, of modern technology to support for that. And I do see one thing I wanted to touch on a little bit is I do see that some of the electronic trading platforms for crypto that are providing interface and connectivity to the OTC desk. That's definitely something I would say relatively new that I've seen this year or later last year that I haven't seen, 2 years ago.
It's interesting. I have a question for you, Alex. Max, the liquidity that you mentioned you need in the OTC market, is it there? Do you see that amount of...
Sorry?
The liquidity that you mentioned an OTC desk would need to be profitable, is it there?
The volumes.
Yeah.
The volumes are there, yeah. But it's a question of being able to keep up as a primary voice operation. I think that's, I look at 99% of my trades are electronic, and we do voice because we have to, some people like it. But if that's your business model from an economic perspective, it's not going to work for longer, much longer.
Alex.
So, I mean, let's break down, there's really sort of 4 services being provided to the marketplace. There's a sort of client service, agency, client acquisition piece. There's providing order books or market microstructure for efficient trading. There's custody, and then there's using balance sheet to sort of lubricate the flow of trading. And to a certain extent, because of the haphazard way that this industry's grown up, a lot of the incumbent exchanges in crypto basically offer all of these things. And so, we see custody integrated with exchange. Really, I think a lot of where the whole space is going to go, and this is then talks about what's going to happen to the OTC desks, is I think there's a lot of exchanges right now that don't have a sufficiency of native liquidity. They're not going to see their liquidity increasing. They're going to be pushed out of business by people like David on the liquidity front. On the custody front, we're seeing stronger solutions, and the integration of order books and custody in a single organization is not a thing that happens in traditional markets, and it's not a good design. So I think we're going to see really some of the incumbents, their actual value is just their client relationships, and see more sort of networking of liquidity in some of the incumbents either becoming more like agencies or just basically dying and losing market share because, when we see a new breed of players coming in that have much higher performance technology, again, I'm not here to talk David's book, but you just have to look
Please
at...
do.
But I will. I mean, you just have to look at the pace at which the major exchanges fall over multiple times a day and give sort of, 10-minute confirmation times, that sort of thing. I mean, that's just simply not acceptable, but people still trade upon them because the liquidity is there. But as soon as you see that liquidity move to platforms that have a high technological service level, you're never going to see it flow back. And so then all of those folks are going to be clamoring around trying to figure out what their business model is and how they stay alive, and some of them have made a bunch of money in the past, and we try to invest that in other ways. So there's going to be a lot of players sort of competing to try to make sense of their life in this marketplace. And I think, traditional OTC players are going to get stomped on from every direction by that transition. And when I say traditional OTC players, I don't mean, people like BTC2 who sort of electronic market making desk that just happens to be, have a human to talk to people. I think that's part of what we're seeing in the bifurcation in the space is, there's room for sophisticated electronic market making OTC desks, there's room for sophisticated microstructure, and there's, and then it's just the question of where do the clients actually end up pointing?
You mentioned client relationships, which is incongruous, I suppose, when we also are talking about the increasing role of technology, and this technology disintermediates client relationships. Max mentioned the voice component. Some people like to get on the phone and know who's at the other end. Gabriel, you wrote a report recently, I think it was out last month, on the interfaces that are emerging now between the various liquidity providers and the end clients, and that is a technological role. Where do you see the role of technology going in the development of the crypto market structure more broadly?
Yeah, sure. So basically, the way I look at this, and I mean, I've done, recently did put out a research piece just focused on the electronic crypto trading platforms I just mentioned. Basically, these platforms are, most of them are, kind of a piece of software that's stitching together market access, trade execution, EMS, OMS capabilities, and also, some of them also provide a little bit of middle office reporting, compliance, and back office, capabilities as well. But I mean, other than one company, which is Tagomi, right? Because they do provide operational stuff for clients to pre-fund with Tagomi, that every other technology providers today, basically included in the research, that is, basically today, their core business is really in the providing a centralized trading interface for users, whether that's traditional institutional, whether that's crypto native hedge funds, whether that's market makers, a really unified centralized trading interface for you to connect to dozens and even hundreds of cryptocurrency exchange venues and maybe a dozen or more OTC trading desks, right?
Like the prime brokerage that we know.
What's novel about that? I don't understand. What's novel about that outcome?
No, it's not.
Surely that's capital markets for the last 20 years.
Yeah, exactly. But we just don't have that in the cryptocurrencies market.
Well, I disagree. I mean, 100% you do today, right? I mean,
We do, how come? Where?
Simplistically, you said how technology is taking over a customer relationship. That's been the case in capital markets for 10 years.
Mm-hmm.
Max does not care if I take him out for a steak and a glass of wine. He really doesn't. He connects to us via an API, right? So LMAX Exchange Group only launched just under 10 years ago. I have clients in 100 countries, have done for the last 8 years. Right? We have 195 institutions connected to LMAX Digital today, 1 year after operation. That's just technology. It's very simple. You go onto the website, you download the API library. If you're smart, it takes you 2 days to connect. If you work in a larger institution in Manhattan, it might take you a week and a half. But that's it. That's technology. The ideas of personal relationship management are going out with the arc. It's nice if you deal with real people, but mostly it's engineers dealing with engineers. And they actually don't care whether you went to the Bears game at the weekend or not. What they care about is, can I cancel and replace my order in 80 microseconds, and can I send you 30,000 orders per second?
Want to make money. Yeah, Max,
That's
do you
it.
agree?
Yeah, to some extent, but not entirely, because most people actually do not care if their orders take 50 microseconds or 10 milliseconds. But I do think that the problem of front-end trading technology is a solved problem. So while you have a company called Trading Technologies who do just that. So the fact that we're talking on Skype and Telegram, it's nuts, but it's just a question of time that people are going to use, maybe not Bluebird terminals because they're expensive, but people are rallying around, I think, naturally some front-end technologies that are going to do the interfacing. It makes no sense that we're using Telegram. It's just that we haven't seen yet a solution emerge that is crypto native, and the ones that you have in capital markets are a bit expensive. Doesn't make that much sense, especially if you're just using them for crypto. But like I'm with David in the sense that the technology behind it is a solved problem. The technology in front of it is also a solved problem. It's just that crypto is a bit of an immature industry. A lot of people have no idea what they're doing. They don't come from a financial markets background, so it's just taking time for people to give up their Skype accounts.
And I think one thing that Gabriel was alluding to, mentioning the prime broker Tagomi, for instance, is the funding at the various exchanges. I mean, right now, until there's a central funding solution that does limit some of the options that you have to get the best prices. David, I heard you speak before about the need for credit in this system. How could that help trading? Could that go some way towards solving the funding problem that Gabriel was mentioning?
Look, it's the biggest inhibitor to the market today, right? It's the ABC of the market, right? One, we need greater adoption worldwide. B, we need banks to actually bank crypto firms, proper banks with grown-up balance sheets. C, we need credit. Why? Because at the moment you're asking somebody you don't know to send you dollars, and he's trusting that someone he doesn't know is going to send him Bitcoin. It's just not going to happen in a grown-up institutional space. We need disintermediation. That disintermediation is a prime brokerage model or a banking model that comes with credit. I'm sorry, Satoshi evangelists. Peer-to-peer, atomic swaps just aren't there yet.
Not to mention on-chain settlement.
I'm all for it. I'm all for it. I think we'll get there, maybe 10 years hence. But today, we need credit. And if you want the institutional money to come, you've got to open your mind to that credit. And if you're one of the larger players in the street, please don't say, I insist that you always go first. No, that doesn't work. Hello? It doesn't work. If we all go first, we never settle. All right? That's just it. Okay? So the way to not always go first is you bring a third party in, okay? So you bring in a credit intermediary. Normally that will be a bank or that will be a custodian.
In
okay?
replicating the traditional structure in the crypto space, even though the crypto space emerged to
It's a
obviate the need
pragmatic
for that.
approach, right? Or otherwise you can trust Mark Zuckerberg. It's up to you.
I mean, this is part of, I think, what we've seen across the board as this market's developed in over the last couple of years is, what we're not ready for the, whether it's decentralized exchanges that pulled in, $800 million in funding in 17 to 18 and trade $1 million a day right now. There are a whole bunch of, future 2030 solutions that if they're fully performant and the world moves, could be there. But for now, we need the traditional solutions that have worked in all of the other asset classes and work fine. And I mean, this whole idea of instantaneous settlement, if you do end-of-day net settlement, you only need to use about 7 or 8% as much balance sheet as you do if you're trying to do instantaneous settlement. And so, separating trade space and settlement space, providing these lubricating layers, is all part of what's needed to bring, to make the existing market function as well as to bring institutions over the line.
Yeah, there's no evidence the market actually wants instant settlement, certainly not at the institutional level. And it's extraordinary that we're sitting here discussing how to patch together this fragmented ecosystem. And we decided the fact that it started out in the retail sector. I think it's the only asset class currently trading today that started out in the retail sector that does not need the services that we are together trying to build here. Let's talk about challenges that the sector has yet to overcome. And we know that there are many. Credit is certainly a big one of them. And staying with that for a second, David, do you think the banks will be coming in soon to offer these services that the sector so desperately needs?
1, 2, 3. I see 6 in the room, so yeah.
Are they nodding? Do they look happy? Do they look interested? Are they
They've
pulling
got
out
to
their
play
nails?
the cards close to their chest. They are coming. They will come.
They're here.
They know it. They just can't say it to you yet because it hasn't been approved at their board level.
You know you want to.
But they're all researching it. They're all taking our prices in. They're all there for price discovery. More importantly, their customers are starting to demand it.
Is that what they're waiting for, do you think? What's the barrier?
Yes.
That
They're
wasn't the
waiting for
case
that
before.
credit. Sorry?
That wasn't the case before in the last bubble. Their customers were not demanding it.
No.
Yeah. But I'm with David that with the banks, you can say what you want. It is only a question of price.
Yep.
The price is high enough. All the talk about, but the regulation, but the drugs, they don't care. If there is a price at which the banks are going to get in. And, we're talking about consolidation. With the exchanges, they made so much money, like a Bitstamp, well, they were acquired, but like a Coinbase, they make so much money. Are they going to get acquired? They don't need to. They can see this through for like 10 years if they cut their expenses a little bit. So I don't know if we're going to see much consolidation, at least in a traditional sense. But, market makers, quite possible that a bank just pays top dollar to get the know-how. It's a possibility. Yeah, and I won't say that here. But the banks are here, they're ready. So some try, you look at Barclays, Goldman Sachs, at the peak of the bubble, they had to shelve the plans because just the market wasn't there anymore. But as soon as it turns, they're going to be back.
And do you think that might be happening now?
It's coming, yeah.
I mean, especially
If
especially after the trading days you guys have had, right?
It's happening.
Yeah. Alex, what do you see as the main challenges to this ecosystem?
Look, I think the ABC is a good starting point. I want to actually ping on the A piece from David, the adoption, that, you know, there's what, 700,000 Bitcoin wallet addresses that have actually had funds flow into them. You know, the big difference between this space and FX is there's 7 billion people who use fiat currencies in their daily life, and there's, you know, what's that? Less than 1,000. There's 1 basis point of that use Bitcoin. So, I mean, I'm not a, you know, whether it's Libra, whether some messaging app, whether there's some cryptocurrency that actually gets to 100 million users, 500 million users, there's actual adoption out there, then that flows into real life fundamental use cases, and then banks have a role to play, and then they have corporate balance sheet, and then you start getting into a world that really looks like FX. But I mean, when does that happen? Does that ever really happen? It's not obvious. Without that, then, you know, there's a lot of energy moving around, essentially, you know, still mostly speculative game with a fair, you know, a narrow fundamental base. And so that's kind of like, that's the big adoption gap. Of course, if we get a real tokenized security market, then that also is another big adoption gap. Banking-wise, I do see we're getting movement there. You know, I think it's, and the other thing is just, you know, the regulatory landscape is still kind of problematic. It still makes more sense for a new player in the US to try to do state-by-state money transmitter licenses as opposed to try to get a federal license, because we don't have clarity from SEC and CFTC about regulatory treatment, and, you know, some amount of global regulatory clarity and consolidation will help there. I mean, you know, I've been in the States for 20 years, and I went to get licensed offshore in Bermuda because it was the only digital asset regime that we could find globally that was a top-tier jurisdiction that actually had a comprehensive framework. I think things are a little bit more advanced in London, but there's a lot to do there to really also just make it easy for the big banks to overcome the annoying sort of head of risk and compliance who's just looking for a reason to say no.
Gabriel, what do you see as the biggest challenges?
Sure. I think a lot of the things that everybody on this panel mentioned make a lot of sense. I just wanted to build up a little bit on what Alex just said on the, I guess, fundamental adoption of use of cryptocurrencies. I mean, I think the one problem I see right now is how do you actually value those cryptocurrencies, whether that's Bitcoin, whether that's Ethereum. Yes, you could say, you know, there's different methodologies in terms of looking at the network adoption, looking at, I guess, scalability of the blockchain network, etc. But, you know, that's pure castle in the air methodology, because if you look at the FX, right, the reason why people can put a price for every FX pair is because fundamentally FX are, you know, fiat currencies that people based in their own countries and markets are using on a daily basis. Corporates are using FX to hedge their FX, currency exposures. Banks are trading FX for their balance sheet and hedging activities, etc. Right? So there's a fundamental use, and because of that, there's a fundamental theories and practices behind FX markets to put a value behind any FX currency pairs. For example, you have interest rate parities, etc. You have all these different theories and practice that have been proven to use for the FX market. But we don't have that yet for the cryptocurrencies market. Maybe in the future, when you have a really big tokenized security capital markets, and then you can maybe borrow some of the discounted cash flow model or any other kind of valuation models from the traditional finance instruments to the cryptocurrencies market. But we are definitely not there yet, and I think there's a long way to go.
And the institutions need that to be able to justify
Yeah.
their investment decisions,
Yeah.
different from the trading decisions.
Yeah.
We've got 30 seconds left, so very, very briefly, in 5 words or less, I'd like you to, what are you excited about in the ecosystem development? What have we really achieved so far? What are you most optimistic about? David, you go first. A few words.
What I'm most excited about Almex Digital being the #1 cryptocurrency spot exchange in 2019. If you're not connected already, then come and see me outside. We will lead this marketplace.
And bring on 2020.
There you go.
And Cable, what are you most excited about in this sector? You've mentioned valuations. What do you think we'll be talking about this time next year? Gabriel, you.
Oh, me?
Yeah.
Yeah, I mean, one thing that I think David mentioned earlier, and I do agree, that I'm the most excited about if we have, either that's banks or maybe just traditional custodian banks, maybe some new entrants to play the role of prime brokerage.
Okay,
And,
can happen.
yeah.
Alex, what do you think we'll be most surprised by between now and next year?
I mean, I'm most excited. We've spent a lot of time refining our model and talking to market participants and actually putting that out to the test and seeing if the demand that we've been hearing for a dark pool and digital assets is going to be met by real volumes. I think it's going to be a very, very interesting year as we're seeing mature players come into the marketplace, and hopefully we can get to a place where we're not talking about issues and technology problems, and we've got a foundation for growth in the space over the years to come.
Max, what are you excited about?
I'm simply looking forward in 2019 to that healthy tug-of-war we have with LMAX on exchange volumes, OTC volumes, which is competition, is driving down spreads and making the market more efficient and better for everyone.
What I'm most excited about is the fact that the conversation has evolved as far as it has to be able to allow these kind of debates and panels to happen, and the fact that all of you have come here on a very rainy New York day to listen to where the crypto ecosystem and the market structure is evolving and how to tie that in to the worlds that you already know. Thank you all so much for joining us. I could happily talk to these guys for another few hours, but a lot of other content to get through today. So a big round of applause to these panelists, and thank you for their time.
Yeah, so Jen's up there. She's going to get their mics once they're done with the picture.
Sure.
Sit up. And we'll go right on.
Put it in the jacket right here. Perfect. Thank you.
See you in a bit. Yes.